Good evening, everybody. Drew with you here, and if you are watching this video, chances are you are taking advantage of our free 3-day trial, or you could possibly just be interested in joining the program as a whole, but you're just not exactly sure where to start. On top of you don't exactly have the best knowledge as far as trading stocks go. So with some great hope here, we are going to see if this video can help guide you guys in the right direction to becoming the best trader you can become, whether it is that you are brand new or not. So without further ado, let's go ahead and dive straight on into this. We're going to start at the Discord here. Right now I am showing us as confirmed, which is the same role that you guys as free, non-paying, whatever members are. You guys can see if you have the blue name, that's what you are. So this is all you can see normally. You have freebies, you have the welcome channel or the categories, you have the limited chat room channels, as well as your support chat thing. So that's what you guys normally see. We're going to show you guys what you will see when we are actually when you guys are actually under your trial. So when you guys get upgraded, or whenever your trial starts, this is what you're going to see. This is why I wanted to start here, because you guys can see all of this. Like, let me go ahead and expand all these categories. It is intimidating as hell. We have over 150 text channels. Every single one has their own function, and it can be intimidating. So first and foremost, when you're brand new to the server, collapse every single category. From the news, just do what I'm doing here. Start from the bottom up. Collapse all these categories. Maybe keep support open, keep the chat room open. You could keep the news open if you wanted, except you're only going to see this go off early in the mornings. That's the only time that's going to go off. So you could collapse that, collapse the welcome category, AI flow, the stocks, as well as other signals. So as a new user, if it's a lot, do all that, collapse all that, because this is all you need. You don't need to see anything else, and I'm going to show you why. Oops, after I clear all these. So this is why. The only channels you really need are options right here, and the trade signals, preferably the one with the green check mark, because this is what our most normal users enter, because the money bag one is for high dollar premiums only, $600 and up, with exits starting at 10%. You need to have a large portfolio in order to enter these trades without overextending your risk tolerance. So that is why you really need to pay attention to the check mark. The freebie signals, you will no longer need to pay attention to that. Mod plays, that is in-house mod plays. Any of our analysts that see something juicy that they want to get on will signal here. Unless you're experienced, we recommend really trying to stick to anything with the green check mark. That is the official signals of this group, and we provide good due diligence breakdowns on those plays, as well as other things. So you get a little bit more of an idea on what's going on with those plays, as well as more of a more confidence, I guess you could say. Again, if you're an experienced trader, this is something you could totally take advantage of, because it's just extra signals. The other signals channels, this is out of house analyst. We have day trades, we have swing trades, we have penny stocks, forex, crypto, as well as futures. Again, if you're brand new, don't pay attention to these right now. Let's just stick to the trade signals. That's pretty much it. Everything else is self-explanatory. You can go around and explore the server yourself once you are upgraded. I'm not going to make a video on that right this second. I do want to go ahead and go over these real quick. I'm sure this looks pretty confusing for anybody that's never been in a group like this before, and that's understanding. So let's go ahead and go over on how to actually understand what this means real quick. We're not going to use Square on our example in our knowledge base. We're going to use Apple. So let's actually go ahead and go over there. Again, docs.870trades. This is under frequently asked questions. This is at the very top. How to read signals and trade signals. So, assuming that said Apple, it would look similar to that, just like the square one did. This is pretty much the breakdown of that. Apple is the ticker or the company name. February 21st or the date following that ticker is going to be the weekly or your expiry. This is when that option expires worthless if we don't sell the premium or do something otherwise. 350 or the number preceding the date is going to be what we call our strike price. This is the price that we think the underlying stock will hit. The next thing after the strike price would be our designation, whether it's a call or a put. Call meaning we think the underlying is going up. Put meaning we think the underlying is going down. We will get more into that in just a moment. And then next, your premium. This is always signified by a decimal and is always multiplied by 100. So 0.84 premium would be $84. So that is the basis on how to understand how to read these signals. They, as far as everything else goes, like these right here, these are your price target levels. If you enter at 2.70, 2.97 will be 10% profit. At 3.37 up from 2.70, that would be 25% profit. And 3.78 from 2.70 would be a 40% profit. SL, that stands for stop loss. 2.78 from 2.48 would be about a negative 10% loss, and we would generally stop out around there if support confirms that that's what we need to do. Again, that's something that this video isn't about, so I'm not going to get into that. But that is what these numbers designate and what they mean. You may be wondering, why are there different closing positions? Which one do I close out of? Generally, unless you have a very large portfolio or are holding more than one contract, we recommend getting out at the 10, either the first or the second price target. That's mainly because it can quickly reject. You see here on SQ, it never made it to 40%. It stopped at 25 and then rejected back down. So that was where we closed out at. If you got risky and tried to hold it to 40%, you may have lost money, and that could be pretty bad for your portfolio unless you have a decent chunk of change in there. So again, that's just kind of covering that. As a new member, don't feel afraid to, even as a free member, or a free trial user, do not be afraid to ask questions. We thrive on answering questions, and this is what we do. So please don't be afraid to ask. So that is the little introduction for the server. Now, the rest of this is just going to be kind of talking for a minute. I've got a piece of paper in front of me here, and I want to go over first the habits, because somebody was asking earlier how can you orient yourself to become a better day trader or to become a day trader, and that all starts down with the habits that you develop. And I just wrote down a few here because I can go all day on this, and I'm trying to keep this video under 15 minutes, even though I still think that's kind of long. Study the basics. First and foremost, study the basics. We make that easy here at 870 Trades. We have this knowledge base. We keep it. You can anything within these first three tabs here between options summarized, what are options, and must know terminology is pretty much the basics. You going over this, whether it's once a day for a month or every day for the rest of your life, it doesn't matter. This will this will solidify the concepts of option trading in your head, so that you, without a doubt, understand how it works and you're not just participating. You know, it's hard to do something if you don't understand quite how it works. So first things first, study the basics. This is this is the first stepping block to you becoming a decent day trader, among other things, of course. The next thing, in my opinion, would be sleep schedule. I don't know what most of your guys' sleep schedule is. Whatever it is, make sure you can be up an hour before market opens at least. That's the best amount of time I recommend. Anything less than that, and you could be kind of pushing and pressing yourself for time before market opens to study the news and to see what's going on. And that's what my next thing was going to be. Use that hour that hour before market open to study the news, to see and understand the market sentiment for the day, and see where we could be trading, whether it's up, down, all around. It doesn't matter. There are several different sites, from seekingalpha.com, investors.com, investorsbusinessdaily.com, marketwatch.com, as well as just our news feeds in this channel right here. There is news everywhere. So if you can wake up early and do yourself that favor, you're going to be a step ahead of the game automatically. So in terms of other habits that you can develop psychologically, you need to learn that you need... Honestly, I don't even want to get preachy on the psychological section. Just the other habit that you can form is start working on your trader psyche. Read our psychology section. Just do yourself that favor, and you're also, keep in mind, this is pretty long. Read it multiple times. Every time you take a shit, read it. Sorry if that was a little abrupt, but I'm serious here. Next, in terms of habits that you want to develop as a trader, sticky notes and index cards. Buy yourself some sticky notes and index cards. Write everything down. I've got 5 sticky notes right in front of my face right here. One of them says check Snapchat. If it's something that you forget to do, or is something that just kind of escapes you, or a rule that you continue to break, or anything like that, write it down on a sticky note, put it on your computer in front of your face, read it every single day. Again, this is going back to just going over the option basics over and over and over, or the psychology. It will concretely solidify that idea in your head, and eventually you won't need it, but you're probably going to keep it. So sticky notes, it's huge. Sticky notes are my best friend. I go through so many a year, so many. It just is a huge thing in reinforcing rules and ideas, and keeping you from trading on a whim or doing something impulsively. That's the other big thing. Like, one of my sticky notes right here says, don't trade before 9:30 a.m., only scalp between 8:30 and 9:30. Which is pretty much telling me don't trade unless you know you can get in and out within a few minutes before 9:30 a.m. And that's because I often forget that, and I will do that. So, and that can sometimes bite me in the butt. So that's a good example of the note cards there. Next habit that you could develop as a trader is tracking your trades. We have a trade tracker, which is available in our docs. If you just type in trade tracker, and it's at the very bottom right here. You can just hit tradetracker.xls, and it will pop up a Excel spreadsheet that you can then use to see what your trades, what your average win-loss is like, and as well as other things. I'll show you guys ours real quick. I'm pulling it up right here. Here we go. So as you can see, you can enter in the ticker. You can enter in the whether it's your strike and your designation. You can put in your entry date, the expiry date, the entry price, the closing price, as well as the amount of contracts. It'll automatically calculate the total cost, give you the profit based on where you closed and how many contracts you had, as well as the percentage. And you can also use this section right here to put notes. If a trade closes red, make sure you have a note signifying why that trade closed red. This is the point in tracking your trades, not only so you can see your performance, but so you can see patterns. Like right here, Uber and Facebook, we got into these back to back. That just goes to show that we either entered in at a really bad time on the market, or we were emotionally trading, and that just kind of resulted in that. So you can do multiple things. Again, volume died. You can see 70, 35, 60%. You can say, okay, I need to tighten that stop loss up, and then you can learn from that, and you can see I just reduced my losses by 2 or 3/3 just by following a rule that I noticed I was breaking from before. So that's something that's hugely beneficial in tracking your trades. So the last thing, which, if to some of you this may seem funny, it may seem weird, it doesn't matter what it seems to you, but if you want to become a successful trader, you better do it. Journal your trades. When you enter a trade, put the reasoning behind it. Even if it's as simple as it was signaled, it doesn't matter. You need to have some kind of reasoning behind it, and you don't even really need to do that. Honestly, what journaling comes down to is it's an extension of lost trades, but it helps to go ahead and do it for every single trade. But most importantly, when you lose a trade, you need to journal that. You need to put in that you lost this trade for this much, and you need to put in why that trade lost. Did a stop loss hit? Sometimes there's some things that are out of your control, but you're going to notice as you journal that you tend to break rules, and that you tend to do things that are more or less against what you should be doing as a trader. So journaling is a huge thing in becoming a successful trader. Again, it all comes back down to solidifying ideas and rules and mindsets. Psychology is the number one thing that defeats traders in the market. It's a killer, and without understanding psychology, you really can't go anywhere. So taking notes, journaling, tracking your trades, all that stuff, that's a huge part in this right here. Last part of this video, sorry it's long, 17 minutes, but hey, if you guys have made it this far, I promise you're gonna come into tomorrow feeling a lot more confident than you would have otherwise. But last part of this video I want to do is the must know basic terminology. And this also comes down to one of the last tips that I have. Learn this terminology. Not only learn it, but use it. It may feel silly at first. You may feel like you're using it wrong. If you are, we will politely correct you. It's not a big deal. But using this terminology is a huge benefit to learning how to become a skilled trader. Mainly because we throw these terms around so much. We use them day in, day out, multiple times, and if you don't understand what they mean, you're just kind of sitting there with your thumb in your mouth wondering what the alien talk is. Whereas if you understand what they mean and you can use them with us, then you're just becoming a useful part of a conversation, and at that you're looking intelligent. So must know terminology. I'll have a link to this here, but we're going to go over this real quick. Hopefully I can get this done within a minute or two. But ticker. A ticker is a stock symbol that is unique which is a unique series of letters assigned to a security for trading purposes, much like AAPL for Apple or SQ for Square. It is just a simplified version of their company name on the market. Call options are financial contracts that give the buyer the right but not the obligation to buy a stock, bond, commodity, or other asset instrument at a specified price within a specified time period. This is anything that we think. I'm simplifying this for you. Other than this right here, calls are when we think a stock is going up. That is it's in its most simple form. Puts are the inverse. Puts are giving you the right but not the obligation to sell or short sell a specified underlying security at a specified price. Again, we trade puts when we think a stock is going down. Strike price. This is the set price at which a contract can be bought or sold when it's exercised. For call options, the strike price is where the security can be bought by the option holder. For put options, the strike price is the strike price at which the security can be sold. The strike is, again, earlier when we were at the FAQs. The strike is a strike. It is what we think the underlying is going to reach. Option premium is the cost. The premium is the current market price of an option contract, or the cost of it. Expiration. This is the last day that a option or derivative contract can be sold or exercised. On this day or before, investors will have already decided what to do with their expiring position. If you don't get out of an expiring position before it expires, it expires worthless. We really make sure that we don't test those waters too much. Bull or bearish. This term refers to the market going up or down. Here at A70 Trades, we're very naturally bullish. We don't really think anything's going to go down for long. And if it does go down, we're looking for an opportunity to buy so we can make money on the upside. Bearish is the inverse of bullish. Bears think that the market is going down. They want to sell stocks or sell short positions. They generally have a negative outlook on the market as a whole. Breakout. A breakout is a stock price moving outside a defined support or resistance level with increased volume. You're going to hear this term thrown around a lot. A breakout is usually what I say is happening before we start to get into a play. Very big signifier there. Breakdowns. Breakdowns are quick pullbacks that occur when a stock breaks through a support area. Breakdowns are the opposite of a breakout. If a stock is breaking down, then it is going downward in the same fashion that it would in a breakout, again, but down. Support level. A support level is a price level whereby demand of a security is strong enough that it prevents the decline in price past it. Support is like a floor. Imagine jumping up and down in a room with an 8-foot ceiling. The floor is going to keep you from falling through to the next level, and the ceiling is going to keep you from jumping through. The support is the floor. Resistance, same thing. We're in that room still. Resistance is that ceiling. It is the level at which the price does not want to go past on an upside. Confirmation, another word you're going to hear us say a lot. Really, you're going to hear us say all these a ton. Sorry, I had to get a drink of water. But confirmation, in a summarized way, is just a chart pattern that shows sustainable stock trading opportunity with virtue by its persistent is confirmed. Pretty much confirmation is when we see price action following a trend in a general direction. Rejection is when a potential confirmation is denied from breaking above the needed levels. So if something rejects, it pretty much didn't do what we wanted it to do. Consolidation is a term for a stock or security that is neither continuing nor reversing a larger price trend. Typically trade within limited price ranges. You're going to hear us say consolidation a lot. That's when a stock pretty much doesn't go up or down for some time. Sell-off, this is when you're going to see a pretty big decrease in a price's underlying value, and it's like it says right here, when large volume of securities are sold, causing the price of a security to fall in rapid succession. Rally would be the inverse of that, is when a large volume is bought and causes security to rise in rapid succession. Rallies are generally what we look for as traders here at A70. Candlesticks. Candlesticks are they're just they're bars of information. You guys have seen candlesticks, I know that, and it includes 4 pieces of information. It's the opening price, the closing price, the high of that period, and the low of that period. There are several different kinds of candle charts, from 5 second to 1 year, etc. Price action. This is the movement of a security's price over a amount of time. We usually watch for price action on the 1 minute scale. We look for really quick price action. You're going to, again, hear us say that word a lot. Momentum is the rate of change in price movement over a period of time, and this usually can determine the strength of a trend. Again, momentum, big thing you're going to hear us say a lot. We absolutely must have this in order to be successful in our trade. So we're always talking about momentum. Same with volume. Volume is a measure for the number of shares traded. Big volume equals big money. Follow the money. General rule of the market right there. Gaps ups, and gap downs. You're going to hear us talk about these every once in a while. Gaps on a daily chart occur when a stock opens higher or lower than it closed the previous day. It happens when there is news or some type of catalyst overnight. That's the big thing right there. Overnight price action from some kind of a pretty big catalyst. So market sentiment refers to the overall consensus about a stock or the stock market as a whole. You're going to hear us talk about a sentiment a lot in terms of whether it can be greed, fear, etc. Sentiment is basically the outlook of the market again. Catalyst, like we were just saying right here, for the gap ups and downs, is an event or other news that propels the price of a security dramatically up or down. We rely on catalyst and news heavily to trade. That's what brings us volume, which in turn brings us momentum, which in turn brings price action, which can cause rallies. Lastly, due diligence. Due diligence is defined as an investigation of a potential investment, such as a stock or product, to confirm all facts. The facts can include such items as reviewing all financial records, past company performance, plus anything else deemed material. This is more true as far as the financial records for long-term holding. In terms of short-term trading, due diligence usually just refers to backing it up by some type of catalyst, as well as as price levels or support and resistance. So that is pretty much it for the terminology. Again, I'm going to link that here. This video got way longer than I thought it would, but if you've ever seen my videos, I preach about it a lot. A quick video does nobody any justice. Me taking the time to do this correctly is only going to better you guys. And if you take the time to actually watch this entire thing, if you've made it this far to listen to me babble here, then you're only bettering yourself. So congrats, and I look forward to seeing all you guys in the chat rooms tomorrow. Please be sure to say hello, introduce yourselves, all that fun stuff. And please, please, please do not be afraid to ask any questions. So, wrapping it up here, guys. Again, my name is Drew, and I don't know what else there is to say. You guys have a great night.